Hey, what's up, everybody? So we are looking at CNBC. I was just looking at the stock markets to see how everything was doing since the recent developments, and came across this article, and I wanted to pass it along to everybody. So we are looking at CNBC, and it says U.S. trade deficit falls more than expected to hit the lowest level since Trump took office. Really good news if you ask me, but you can let me know what you guys think in the comment section below. But we are going to further take a look at this article and see exactly what they are saying. It says the U.S. trade deficit fell more than expected in November ahead of negotiations with China that cooled the simmering tariff battle between the two sides. The shortfall in goods and services declined to 43.09 billion. Still a big deficit, but it looks like it is shrinking a little bit. For the month, 43.09 billion for the month, below the 43.6 estimated from economists surveyed by Dow Jones. That represented the lowest deficit since October of 2016. That was down sharply from 46.9 billion in October, which was revised lower from initially reported 47.2 billion. President Donald Trump has made reducing the trade deficit a major priority of his administration, and November marks the first month that it actually happened. The gap had continued to grow despite the White House's intense pressuring of Beijing to loosen its trade barriers and stop appropriating U.S. technology. In addition to representing the lowest point of the Trump administration, the number also provide further indication that fears of a weak fourth quarter for GDP were probably overblown. Overblown is a key word that I think the stock market overblows a lot of things. I think the silver and gold market overblows a lot of things. I think every market at times overreacts to little indications, a tweet, conversation between the U.S. and China, and if markets would just sit and wait and see what happens, we wouldn't have the volatility that we have. But especially, I think stock market traders are the most fickle because they're in and out, in and out, in and out, and that's what causes a lot of volatility, I think, in the stock market. But let's continue on. All right, so it said that fears of a weak fourth quarter GDP were probably overblown. When economists had once projected little, if any, growth to close the year, consensus now is for 2%. 2% might still be a little low. We always like to see 3% growth, 3% or better. If it is 2%, I don't know what was projected by the economist. If it must have been lower than 2%. But we always like to see. I'm hoping that our fourth quarter GDP is well over 2%. For me, if it is 2% or lower, then that is for me, it's extremely disappointing. I want to see 3% growth in GDP. Anyway, let's continue on. The stabilization in global manufacturing activity and the trade truce with China suggests that the drag on the U.S. economy from weak growth overseas has now run its course. Andrew Hunter, senior U.S. economist at Capital Economics, said in a note. After a nearly 2-year skirmish that saw both sides lob tariffs back and forth, and the U.S. and China are expected to sign the first phase of the trade deal later this month. I think that's expected, I don't know, 14th, 15th, 16th, somewhere around there. I haven't kept a close eye on when this trade deal, first phase of the trade deal, is exactly supposed to be signed. We see both sides going back and forth. Yes, it's going to be signed. No, it's not going to be signed. China says they want to sign it. Then they say that they don't want to sign it. And even if they do sign it, I don't know how we're going to hold their feet to the fire when there's really nothing. Even if China promises to do something, are they really going to stay honest to their promise, or are they just going to renege on the whole trade deal? So I'm not sure how that's actually going to work, since President Xi in China really doesn't have to, there's no election. He's the head honcho in China, and no one's going to challenge him. So who knows how that's going to end up turning out. But as you can see, according to this article, it looks like we are, starting to go in the correct direction, even though the trade deficit is still pretty large, pretty big. So it says the deficit with China decreased 2.2 billion in November to 25.6 billion, owing to a 1.4 billion increase in exports and an 800 million decline in imports. The fall in imports is not expected to last, but likely to contribute to a stronger fourth quarter GDP reading. So here it shows, just lost my space page. Okay, U.S. trade deficit shows here China, European Union, all other countries, Mexico, Japan, Canada, South Korea, and then this here is 2008, and then 2019. So it looks like, so it says here in China, the trade deficit was in 2018 was 381.1 billion compared to 2019, 319.8 billion. So you can see the it's a pretty big difference. And then here we have the European Union from 2019 from 2018 to 2019. Here's the other countries, Mexico. So looks like we are getting better as far as trade deficit from 2018 to 2019. Then we'll have to see when the data comes out from 2019. Hopefully the trend continues into 2020. So let's take a look at what the stock market is doing. It looks like the Dow Jones is down 116 points, while the S&P 500 is down 8 points. Nasdaq is up 9.9 points, almost 10 points. So stock market is mixed right now. And let's go take a look at Kitco and see what the silver and gold markets are actually doing. All right, so we are on Kitco. We are looking at the gold market, and gold is up slightly by almost 0.5%, 0.41%, or up $6.40 to 1,571. And let's go ahead and take a look at silver real quick. We are going to look at silver. Silver is up over 1%, up 1.10. Let's get rid of that. Up 1.10%, or up 20 cents. So silver is the winner as far as right now, as far as how much they are up by. Silver is at $18.32. So it's going to be interesting to see as this unfolds, the Iran stuff, if the phase one trade deal actually gets signed, and as everything comes together, where it's going to be interesting to see how the stock market continues. Even though the stock market has took a little bit of a dip because of the Iran stuff, but still sitting at all-time highs while silver and gold continue to rise. So it'll be interesting indeed. Thanks everybody for watching. Please like, comment, subscribe. I'll talk to everybody on my next video. Thanks a lot, everyone.